Kia ora. Jeremy Couchman here, Senior Economist at Kiwibank. Now, it's been another remarkable month in the housing market, and at the top of the list has been some key policy developments. Firstly, the Reserve Bank of New Zealand has recently announced it's going to consult on the reinstatement of loan-to-value ratio restrictions on high-risk lending. And if you remember, they were removed back in May. Now, this move was warranted because we'd seen a massive run-up in lending to higher risk borrowers, and these include investors and owner-occupiers that have small deposits or less equity backing them up in their borrowing decisions. Now, in terms of when they might come in, the Reserve Bank's laid out a timetable of the 1st of March of 2021, but given how these are applied to banks lending, it's likely that banks will probably move on them much sooner, and we might see a pullback in that high risk lending as soon as December, even January in 2021. Now, the Reserve Bank might have taken away from the market with one hand, but it looks like it's given it back a little bit on the other. So the Reserve Bank's November monetary policy statement, the centrepiece of that was the announcement of a funding for lending program. So this will allow banks to access to cheap funding from the Reserve Bank at a very low rate, at the official cash rate, which is currently at 0.25%. And this will give banks the confidence to be able to lower deposit rates in the current environment and ultimately lower lending rates for both on housing but also on business-related lending too. Now, this is going to add further stimulus to the economy, but we don't think the Reserve Bank is quite done there. We expect them still to have to lower the official cash rate into negative territory in order for them to be able to meet their inflation and employment mandate. We're still expecting that to happen, but we've pushed out our call to a rate cut not happening until around May in 2021. Now, in terms of the data front in the month, it's been another very hot month in the housing market. We saw a rapid increase in house price appreciation. The Auckland region is the first to actually record a median house price of 7 figures across the whole region, and that was bang on $1 million. And house price growth actually accelerated up to 13.5%. Now, pulling all this information together, we've updated our forecast of house prices, and we certainly no longer expect to see any house price correction either this year or next. We do expect to see house price growth remain at that high double-digit level over the first half of 2021, but we think from there it will start to slow back to more moderate levels of around 4 to 5% annually, still a decent rate of growth in the current environment. Now, it has to be said that the LVR restrictions coming back in play will take some of that froth off the top of the market, but you also have to consider that we still have borders closed, which has very much limited population growth, a key driver of housing demand. And given that the timetable or the outlook for when borders might reopen remain very uncertain, we think this will start to play on the housing market next year. The other thing to consider is the labour market. We saw that the unemployment rate come in at 5.3% in the September quarter, and we expect it to continue to rise in the quarters ahead. In fact, we expect the unemployment rate to peak around 6.5% early next year, and again, this should weigh on housing demand too. So all in all, the housing market's likely to have some astounding months ahead, and as we move into 2021. Thank you.